Professionals in this sector believe that efforts should be intensified to encourage people to save, as this could help the country achieve a saving rate of 30% of the annual gross domestic product. This would also assist the private sector in accessing loans at lower interest rates. Enora Gladys with more.
Those involved in the agricultural value chain report difficulties in obtaining loans with low interest rates, and they are not given sufficient grace periods for long-term loans.
These crops grow in a period of 3 months, which requires us to store more for the future use and be able to reduce prices for consumers and give a good price to the farmers to be able to get the farm back. You may find that someone can make an investment and wait for 2 years without making returns on the investment, which is a big problem since in the 2 years, the interest on the loan acquired keeps increasing. When you look at the accumulation of added value on different crops, they should invest in it and build an industry that solves the problem for a long time.
To facilitate lower loan interest rates for customers approaching financial institutions, the country needs a higher savings rate relative to its gross domestic product. The World Bank representative in Rwanda explains how this could enable Rwanda to have an economy supported by the private sector.
Maintaining Rwanda's development trajectory and achieving the goals outlined in Rwanda's Vision 2050 will require increased efforts to shift the drivers of economic growth towards a private investment-led model, given the country's shrinking fiscal space. Rwanda faces a challenge in mobilizing domestic savings, critical for private sector investment, and to reduce the country's vulnerability to diminishing external finance. While financial inclusion has risen sharply with significant transitions from informal to formal savings methods, Rwanda's savings rate remains low compared to regional and aspirational peers.
On the other hand, those responsible for financial institutions assert that there are mechanisms in place to make saving easier for many without being burdensome.
I think we've seen in other markets things like gamification of savings, save as you pay or save as you earn, things that are seamless. You don't feel that you're saving, yet you're actually saving. So I think we've not been very innovative and creative in designing savings products. But we are catching up slowly, and I think in the next couple of years, not months, we'll be able to have products that are attractive to the youth, and they'll be saving without even realizing that they're saving and supporting the economy.
Ejo Heza is a savings scheme that helps people in savings. From 2018 to 2024, it has 3,400 members who have opened 4 million accounts. Gaspar Bayigane, the head of Ejo Heza in Rwanda Social Security Board, states that these savings are being invested to generate additional returns.
Yeah, Ejo Heza savings are invested through the Rwanda National Investment Trust, RNIT, which invest in various assets, mostly domestic assets. So money is invested mostly in treasury bonds, mostly, but also in fixed-term deposits in local banks. And we have investment that can reach up to 12% compound interest, which makes the savings continue to grow with time.
In 2024, the national savings rate was at 12.5% relative to the national gross domestic product, while the goal is to reach at least 26% by 2029. Enora Gladys, RwandaTV News.